And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning, futures family. Welcome to the Market Prep. Wednesday, May the 17th. Our goal here is seeking accurate context. Always thinking about good risk management and remaining patient in our trading. My name is John Hoagland. Thanks for trusting me with your time this morning. Hope you're feeling good. Hope you're feeling ready just to kind of try and be patient. We're still waiting for news of the debt ceiling and some other things going on. So we're still pretty range bound in many of these markets. We're still trading June crude oil this morning. If you're thinking, there's still twice the amount of volume in the June contract as the July contract. So I'm going to keep that June for today, probably July tomorrow. As far as other things going on, if you're already in the markets, you're probably not too much into any losses or money here so far. So we're going to get into it here. 6 o'clock this morning, mortgage rates came out. 6.57%, a little bit higher than they were last week at this time. I found it kind of interesting that the mortgage applications dropped 5.7% in the last week. Find that interesting. As far as housing numbers, the housing starts numbers came out very little higher than expected, and permits came out a little bit lower than expected. Didn't see much reaction in the markets. As we all know, the focus is truly on this debt ceiling situation that we're facing. At 9:30, the EIA petroleum status report is due out. The API announced a 3.6 million barrel boost in crude oil. The EIA, I guess, is looking for less than a million barrel draw. And of course, we believe we have confirmation that the U.S. is going to be replenishing the Strategic Petroleum Reserve. Hasn't made any big difference here in crude oil, still range bound, rollover range. We're going to see all this on the charts very shortly. As far as U.S. stock indices, holding steady to a little bit higher this morning. Amidst maybe some positive rhetoric from those involved in the debt ceiling negotiations, Biden says it's on a path towards reaching an agreement, and McCarthy, a little bit more optimistic, says it's possible to get a deal by the end of the week. So at least they're giving us that. Any news today takes a back seat to those debt ceiling negotiations. Target's earnings came out with mixed results this morning. Cisco is due out after the close, really getting close to the wire with the end of earnings season for this last quarter. Crude prices hold higher after the API raises inventories on expected U.S. SPR, Strategic Petroleum Reserve. That's hard to say sometimes. Replenishing plans, and again, the EIA is estimating just under a million barrel draw in crude stocks here in the U.S. The VIX this morning down slightly at 1765, where it was 1752 yesterday. The dollar index higher this morning, 102.94, where it was 102.39 at this time yesterday. And the yield on the 10-year exactly where it was yesterday at this time at 3.5%. Make sure you hit the lucky like button, share, comment, question, feedback, heckling, and love are always welcome here on the Market Prep. We've got group coaching today. I've got a couple of good questions if you're wondering how to put the profiles, the market profiles on TS Trader. That's one of the things I'm going to go over in some detail this afternoon at 12:30 p.m. Central. For group coaching. Any other questions are always welcome. And of course, Nobody knows everything. I certainly don't. If I don't know, we're going to have the opportunity to learn some things together, which I truly enjoy. Thanks again to Tori for joining us for Make Hogue Money yesterday. We ended up positive on the day. That's always a good thing. And we look forward to Make Hogue Money, the afternoon session today at 2 o'clock after group coaching. Which is all about change, isn't it? I put out a little short earlier from a quote that I saw from Bruce Lee. There's a couple of things that I say all the time. And, he said them, of course, before I did. But he says you really have to be careful with the way you talk to yourself. Don't talk to yourself negatively, because your body doesn't know the difference. You bring what you feel, what you think. And he also says, what you are not changing, if you're not changing that inner dialogue to something positive, you are also choosing it. So remember, trading is all about change. Markets change, prices change, markets change people, people change markets. If you're not willing to make the changes necessary to succeed, it's going to be a long road for you. So we are, of course, looking forward to success for each and every one of you. And of course, context, risk management, patience, remaining patient, remaining centered, staying humble, all of those things can lead us to there. Just keep those inner thoughts positive. Just because you had a losing trade doesn't make you an idiot. It's just a losing trade. It's one thing. So feel good. I just got done listening to some really classic rock, one of the original rock stars. Mozart, had some Mozart on before the prep this morning, and it's got me kind of charged up, but I have to remember the context of the markets. Feeling good, feeling ready, feel like it's going to be a good day, and I'm going to keep that in mind as I go through the day. No matter what happens, it's going to be a good day. So we're going to jump into the charts. Got to say hello to everybody, as always. Good morning, Shaw. Lacey says good morning to everybody as well. Brian, Rooster, Timothy, Chad, Stephen, Andre, Henry, Will, good morning, Bill, Alejandro, John, Austin, Khalid, Kevin, good morning. Jason, Robert, good morning. George Duque, good morning. Bear goes long. Yes, only for a trade if you are well rested and prepared. 100%. 100% bear goes long. If we're not feeling well, if there's something outside of trading that is bothering us, it can certainly lead into our trading. So make sure you're feeling good and prepared and in the right mindset. Sarah Hall, speaking of mindset, prayers and love to you as well. George, good morning. The center of the universe is right here listening to me and is saying woof, which means good morning to everybody. Trading Research, Anissa, good morning. Jason Shaiti, Pershatam, good morning. My guy Vince, Mark, Andy Bleed, Hegel Matters, Dan Trader, good morning. Don Grounds, Hero, Naztic. I got Lost James, there you are. Scott Saw, and he conquered. Just under that is the link for group coaching. Make sure you register and join us. Sarah, I'm glad you enjoyed Tori. She was a lot of fun to have on, and we're looking forward to having her on more often. Rusty Golfer, good morning, sir. JD, may our trading plans remain consistent today, for sure. Kevin, you must have been a Zen master in a prior life. I don't know about that. I've just, great stories are born of bad decisions. And I've made a lot of them. I've probably made more than most. So it just, lets me accept myself and accept others and accept what happens and stay positive and just be ready. We don't know what's going to happen, and we have to take what comes and stay positive, right? Kaylee, good morning. Henry G. Chopin is really good soft rock too. Good for reading Jim Dalton. There you go, Henry. Ted, good morning. Pete, Columbus, Stephen, Barry Brooks, Ponzi, Zombie Killer, Water and Flow, or Water Can Crash Be the Water, or Water Can Crash Be the Water. I'm not sure what that means, but I think you're saying listening to flowing water can be helpful and calming. I'm sure maybe that's what you're saying. Vlad, Brody, Jeff B., good morning, everyone. So what are we doing? We still got the equities kind of holding higher here. Of course, you know, everybody's looking for news. Everybody's looking for information, especially these markets. Again, if you weren't here right at the beginning, we're gonna remain in June crude today, probably July tomorrow. I checked the volume earlier today, and it was about half the volume in July as in June. So I'm going to stay in June today, probably move to July tomorrow, as expiration is on Monday. So by tomorrow, for sure, we'll be trading the July contract. Let's jump into the charts and see what we see here. So, as usual, starting with the E-mini S&Ps, let's bring the daily up. This is the daily chart. Well, we've been range-bound for a month. That range has gotten tighter and tighter. This market is looking for new information before it is going to be willing to go anywhere. 1, 2, 3, 4, 5, 6, 7, 8 days, 7 to 8 days in range and in value. Yesterday, we lost 12,000 in open interest. We did not bring new business to the downside. We got rid of old business to the downside. Volume was yesterday. What was it in the New York Stock Exchange was 3.6 billion billion shares traded. Nothing tremendous in futures. We did end up putting a late spike in yesterday. So that open interest loss indicates liquidation, possibly some longs. Price remains in balance. My main hypothesis for equities for the time being is to remain range bound. Well, maybe not the NASDAQ, but the S&P remain range bound until we get some new information. The NASDAQ is presenting a different type of situation. We'll see that shortly. So we're going to be looking at the S&Ps as relatively range bound until there is some sort of resolve in the ceiling debt ceiling situation, or we default. One or the other is probably going to bring some volatility in this market, don't you think? Here's the 30-minute chart. So we've got our week lows here. We were looking at this yesterday. We were looking at this the day before. We're looking at a falling triangle, or I guess you could call it a falling triangle. The market is coiling inside of that. So the major areas of excess that I'll be looking for some bigger opportunities would be at these lows, or would be up near this trend line. We've got the market kind of holding higher here already this morning. We did put in a late spike. We're going to be opening above the late spike. What does that tell us? It tells us, well, the market is likely accepting prices higher than the base of that late spike. Now, the base of that late spike, we'll see it on the profile here. As far as overnight inventory, we're a little bit long. So, opening in range and in value, stay patient. We are holding some long overnight inventory. If we do continue to get longer and longer, that might make our little opportunity up near this trend line a little bit tastier. It'll be right around yesterday's high, value high from the day before yesterday. Looks like a kind of target-rich environment up there. So we've got about a half an hour before the open. ACH, anything can happen, but I'm really kind of looking for the market to hold 41.27, which was an important level for us earlier this week. 41.27 was right here. This market just went to it, bounced, went down through it, came back to it, bounced again, and then settled higher. So we haven't really seen any meaningful participation below that level. Makes sense that that's the base of our late spike. Look at this on the TPO chart. Oh, hold on. I was going to show you that in a minute. So this includes the overnight. I don't want that. I want this one. not including the overnight. So a normal variation trading day, very wide profile here, putting out another prominent point of control. Here's the late spike we put in at the end of the day. So 41.2675, 41.27 basically is that level, and it was kind of an important level for us this week. Look where it went to yesterday as the low of the initial balance until we got the late spike. 41.27 was the low. So that number just keeps popping up for some reason, and it kind of sticks in my head and is likely to create some sort of opportunity for us at some time here in the future if it hasn't already. Let's take a look at the late spike. Well, what is a late spike? A late spike is a range that is extended late in the session. The market closes without the opportunity for price to prove acceptance over time. So we look to the open of the regular trading hour session the next morning. We open below it, it's acceptance of lower pricing, a higher probability. Nothing is 100% in futures trading ever. Opening in the late spike is a kind of a secondary acceptance of lower pricing. Opening above it is rejection of lower pricing. So I'm really kind of looking forward to potentially having an opportunity up at the upper extreme on this chart here for a chance to see if maybe that gives us an opportunity. We've got 1, 2, 3 points of contact on that level. We're going to see if that offers us opportunity for today. Now, this was the composite profile since the beginning of April. This is the range that we've been in. Look at where the point of control is. Look at where we are. We are really just kind of stuck at the most popular levels for the last month. The market has spent more time between here and here than any other place in the last month. It's comfortable here. Our little tennis player is standing center court waiting for the next volley where it can go get it. Wanted, if you do the composite profile, what you have to do is, I'll show you on this one. On this one, sorry. So I'll left click on one of the TPOs. It'll say merge profile left. Then it'll just merge it to the profile. And I can do that over and over again and create that composite profile. I'm just going to remove the splits for now. If you have more questions about that, Wanted, come to group coaching today at 12:30. The link is in the chat. I'll put it in there again if you'd like. And then you can ask all the questions about those TPO charts as you want. Okay? All right. So let's move on. Let's take a look at crude oil, which just opened. That's why we kind of go ES to crude. Now, all right, third day in range, up against an important inflection level. We already failed up above this trend line, points of contact, point of contact, points of contact. We weren't able to maintain price above that. Now we've got this new trend line, which has points of contact, 3 points of contact, 1, 2, 3. Now 4 points of contact. It is largely range bound. We are looking for new information. Yesterday on the pullback, we lost 8,400 in open interest. That kind of is, of course, blurry because of rollover. It's very difficult to gauge volume and open interest during rollover, and especially in a contract like crude oil that has a contract every month and trades 10 years into the future. So it becomes much more difficult to gauge open interest. We're just going to be looking, for me, probably at seeing if we can get above and accept or pull back to this trend line. Here's the 30-minute chart. So I don't have that trend line on here. Overnight inventory is largely long. The market has, I believe, left the opening range at the low of the session, which has me looking for longs already to see if maybe we can preempt a breakout above that trend line. Hang on a second here. Here's the oh, that's not what I'm looking for. That's the dome. Here is the crude oil opening range, the low of the session. So as long as that remains, I'm probably going to be looking for longs and hoping for a breakout above that level. I don't know what's going to happen. It makes it much more difficult when it is in rollover. Always remember, rollover tends to screw things up. It's one of the things that I don't like about crude oil is there's a rollover every month. And for 1 week every month, maybe even a little bit longer than that, the market gets a little bit crazy. All right. And what about the TPO? Normal variation, extreme day, excess at the low, excess at the high, kind of low excess high here, low excess low. This is low at low excess. This is kind of a weak high here, and we've got a weak low here. The market is truly exhibiting range-bound activity that just doesn't want to give up. See, now we're seeing some continuation to the upside. The opening range to the low of the session. We're looking for longs. We probably should be long here, but of course I'm not. I'm busy. Here's that daily chart. Look at where we're at. We are bordering a breakout above this trend line. And on switch day, nonetheless, oh my goodness, that's going to make a lot of our longer time frame traders a little bit crazy today. If we become directional today, that's going to be a little bit nuts. NASDAQ. The upside grind continues. We added 6,000 in open interest. S&Ps, we lost 12,000 in open interest. They are painting a different picture, these markets. The NASDAQ stronger than the S&Ps. S&Ps range bound. NASDAQ directional and not actually doing that bad a job. With the upside grind and the open interest increase yesterday on a little bit higher volume, I'm giving the auction grade for the NASDAQ a C++ for you code writers up there. I just couldn't go B. The momentum just doesn't feel like it's there, but it sure is grinding those shorts and getting longer as price continues to move higher. I like it. Not that confident in it because none of the other equities are doing that. The Dow is still down on the week. S&P, I believe, is up on the week. Up on the week. The Dow is still down on the week. So, conflicting information creating cognitive dissonance, perhaps? We have an inside extended trading hour range so far today. Here's the 30-minute. Holding upside structure. Pretty decent move to the upside, but it didn't hold all that well. Our recent high is in the irregular trading hour session. We had to take out this high for that to happen, which we did yesterday. Overnight inventory, largely flat to maybe a little bit long. We're in range. We're in value. Patience. Last week's high in play. Resistant here. Supportive here. What about the TPO chart? So this indicates actually a short covering P-shaped profile, which is not supported by open interest. We added open interest. So not only do I believe we squeezed some shorts out of the market yesterday, which the equities do whenever they go higher. They are always squeezing shorts. We added new business to the upside. We have a weak high. We have an excess low. It's a normal variation, extreme day. No necessarily weak lows over single days or over a series of days. We had a weaker high up here over a series of days that we're now holding above. So here's our low, here's our high. We're in range in value. You guys, I say it all the time. Maybe I say it too much. But we have to stay patient. Better trade locations may come as the day goes on. I want to take a check here on crude oil here just to see how we're doing up against this trend line. We're wrestling with it now. Wrestling with it now. Wrestle away. Wrestle away. Gold back below 2,000. What the heck is going on here? So we lost 14,000 in open interest yesterday. We finally squeezed out a whole boatload of longs on higher volume, but the auction didn't bring new business. It took care of old business. Watch and see below weekly kickoff low here, which exactly is 1992, where we may find some continuation. Look at all the excess below here over the last month. Excess, 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 excess. Are we going to exhaust the buyers here? We certainly got out of longs yesterday. If these buyers are still present, this is going to be a tough place for us to get through. That weekly kickoff low, again, is going to be pivotal. Again, nothing but excess kind of below that level. Every time we've come below that level, we've run into buyers or run out of sellers, one out of the two, right? So, very important level here. Very important level. Here's the 30-minute chart. So, right to it yesterday. We opened, closed the gap, rejected, sold off, went right to weekly kickoff low where it became magnetic till the close yesterday. Okay, overnight inventory, we're looking at possibly some shorts. We have no gap. We've traded in regular trading hours exactly within 2 ticks. 1991.80 is our high, where 1992 even is the weekly kickoff low. Remember, everything is a zone in trading. There's nothing finite. There's not one level that is precise. If we do catch it, it's luck. So, for me, I'm kind of looking at an opportunity up against this weekly kickoff high because at the very least, it lets me limit risk. What do we always say? The second thing, context, risk management. Context, we're below an important inflection level. Risk management, that important inflection level offers risk management, offers the opportunity to limit our risk. Here's the TPO chart. So this is a trend day. That's what I'm calling it. It lost open interest, did not gain it. I really think we need to see some meaningful participation below that weekly kickoff low of 1992 right here for us to really start to accept lower pricing. I don't view this as a confident trend day to the downside. It was more of a fear-based, emotional move. There's holes and anomalies. It just doesn't look all that confident. Look at where, if we were to call this a late spike, look at where the overnight high was, 97. Looking at this late spike is 1996.80. So this area up here, even in the overnight, appeared to show acceptance of lower pricing. We've opened in or below the late spike. Another nuance that says the price is likely to accept lower pricing. But again, I'm looking for meaningful participation down below 1992 for continuation to the downside. The euro has broken out of its bear flag and is attempting to continue lower. We lost 300 in open interest yesterday. Not a big major breakout. Where I'm looking for the breakout would be for today to increase open interest in, again, another meaningful way. There's so many words and colloquialisms that we use in trading that are subjective. What the heck is something in a meaningful way? It's all in how you look at things, and it's all in, I guess, trying to hypothesize what meaningful or acceptance or rejection, what all that means in the current context, right? So we're going to be looking to see if this market can continue to the downside. Of course, we need to keep an eye on the dollar, looking for acceptance or momentum to the downside. Here's our 30-minute chart. We kind of closed this gap, but in the overnight session, not in the regular trading hour session. We've opened with a gap. If we can't close the gap, that tells me we may be looking for more opportunities to sell this market. But, here's our trend line that broke us out yesterday. We didn't get momentum. We did close below that trend line. We could feasibly come all the way back to that trend line before continuing to the downside. I know this doesn't help much, but this is a complicated situation that this market is in. That overnight break that we took last night complicates things greatly because, we've got a naked point of control down here that we checked. But in the overnight, we've gone through this gap here, which is created by regular trading hour sessions. So we have not traded through that in regular trading hour sessions. What I would really be happy with right now, if I were up trading at 10:30 last night, was the opportunity for us to see a short up against this level. And again, why? Because it helps us limit risk. Where we are now, it's difficult to find areas to lean against. So I'm going to stay patient, see if I can find some daytime frame structure to lean against if we can't close the gap to the short side, and we'll see what happens after that. Here's the TPO chart from yesterday. Week low, normal variation, extreme to the downside. We've certainly repaired the profile from Friday. We spent 2 days doing that. Now we're free to go. Lots of visuals down below. Naked points of control, naked points of control, naked points of control. Lots of potential visuals. All within reach today. 10-year. The poor 10-year still range bound and short time frame controlled. Although we have been seeing an increase in open interest over the past few sessions. We added another 40,000 in open interest yesterday. I guess you could say in the short time frame, the auction to the downside is performing relatively well, even with volume lousy. I think we've added over 200,000 in open interest over the past 3 or 4 sessions here. Something's going on here. There's some energy coming in, but I don't see where and when that's going to change. Well, we can make a really good hypothesis or assumption that should something be resolved as far as the debt ceiling is concerned, that could change things drastically, and a default most certainly would. So here we are. Here's the 30-minute chart. What are we doing? We move to this level and we sit. Last week's low, just kind of hanging out here. Inside range, bordering value. I'm probably not, even if I did trade this market, not all that interested in trading it today without some sort of news, something changing. Take a look here. So, a little too expensive yesterday in the natural gas, I guess, huh? We did lose 14,000 in open interest. Any longs? We got close to this weekly kickoff level, decided they were going to bail yesterday. Take a look at this 30-minute chart. So we opened, we couldn't continue. Overnight inventory long. Some probably speculators, longer time frame speculators long. They bailed. Open, in-range value, rejection. Last week's high looks kind of interesting because it kind of creates the neckline for a potential head and shoulders. If we can't hold this, I would, be thinking about maybe some directional activity to the downside. Because we are sort of in balance still. Here's the TPO chart. Double distribution trend day, excess high. Did leave an anomaly up here. So far, not much effort to get to that. Prominent point of control here already checked. Points of control, lots of visuals, mostly on the downside here in recent visuals. So we'll have to see what happens here, I guess, huh? Stay tuned to As the Market Turns. So, how did the ES go for late spike low value to high value this morning? Well, there was some, if you can call it, news about the debt ceiling negotiations yesterday. As I mentioned at the beginning here of the prep, the president said they're on a path to reaching an agreement, and then the Speaker of the House, McCarthy, said it is possible to get a deal by the end of the week. So whether they're blowing smoke or not, we don't know, but at least it's given the idea or the perception that maybe they're going to get something done so we don't default on our debts, which everybody is saying could be the end of the world, which I don't necessarily believe that, but it's certainly going to create a rough patch. So let's take our deep breath. Let's stay humble, grateful, creative, and centered in your trading today. Remember, if you were a ball of clay and you were not centered, you would not be making something beautiful. So be a centered ball of clay today in your trading. Stay positive, man. Be kind to yourself. Be kind to others. Say a prayer for peace. And I will see you 12:30 for group coaching, and I'm looking forward to it. Talk to you then. Get out there and profit today. Trade well. Blessings to you all.